Ladies and gentlemen, good day and welcome to the Sobha Ltd Q1 FY 26 earnings conference call hosted by ICICI Securities Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then zero on your touchtone phone. Please note that this conference has been recorded. I now hand the conference over to Mr. Adhidev Chattopadhyay. Thank you, and over to you, sir.
Good evening, everyone. On behalf of ICICI Securities, I'd like to welcome everyone on the call today. From the management, as always, we have with us Mr. Jagdish Nangineni, the Managing Director, and Mr. Yogesh Bansal, the Chief Financial Officer. Now I would like to hand over the call to the management for their opening remarks. Over to you. Thank you.
Thank you, Adidev. Good evening to all the participants of the call. I and our Sobha team are pleased to connect with you today, post declaring our Q1 FY 26 financial results, which we declared yesterday. This is the first time in the last 15 years that we have declared the quarterly results within a month after the end of the quarter, thanks to our improving processes. In our first quarter of this financial year, we achieved our highest ever real estate sales, crossing a huge milestone of 2,000 crores for the first time, with a total sales value of 2,078.8 crores. This achievement was driven by a successful launch of Sobha Aurum in Greater Noida, our first project in Greater Noida, a project that has garnered exceptional demand from customers in its launch week towards the end of June. This achievement signifies a major step in deepening our presence in NCR. Our total sales for the quarter were supported by a sale of 1.44 million square feet across all our operational markets, with an average realization of 14,395 per square feet. During the quarter, we launched two projects measuring 1.62 million square feet. One of them is Sobha Aurum, and the second one is Marina One, 4 towers, which constituted about 920,000 square feet. Cumulatively, during past 5 quarters, we launched more than 10 million square feet of area, and our inventory at the end of the quarter was about 11.55 million square feet, with a potential sales value of about 17,000 crores. In addition to that, we have a strong residential pipeline of 17.67 million square feet across 17 projects in 9 cities, and a commercial pipeline of about 0.7 million square feet across our operational cities. We envisage to launch these forthcoming projects in the next 4 to 6 quarters. Also, we are working on our subsequent project plans for about 23.53 million square feet. During the quarter, we completed 1.07 million square feet of delivery, which is 594 homes, and we are on track to complete about 4 to 4.5 million square feet for the balance 9 months. While the operational and cash flow performance has been healthy, one of the key concerns for all of you might be on the margin front. We expected significant improvement starting this quarter in this year. However, due to delay in obtaining OCs in 5 Bangalore projects, we could not recognize those project revenues and corresponding margins. This has led to much lower margins, while with all the operational costs baked in. We expect to see good improvement in the subsequent quarters and years as we recognize these completed projects. With this, I hand over the call to Mr. Yogesh Bansal, our Chief Financial Officer, to provide color on the financial performance, post which we shall open the floor to take questions.
Good evening, everyone, and thank you for joining us today. I will first update about cash flow, our quarterly performance and future visibility. Then I shall briefly touch upon the P&L and open the floor for questions. During current quarter, our total collection from all businesses was 1,778 crore, recording a 15% growth from Q1 2025. Real estate segment recorded highest ever collection of 1,599 crore, supported by strong sales and construction milestone completions. Contracts and manufacturing businesses contributed 179 crore in Q1. We generated 395 crore of net operation cash flow in the quarter. Post finance, land and capex related payment, net cash flow was 56.8 crore. Our gross debt was 1,019 crore and cash balance of 1,706 crore. Our average interest cost for the quarter was 8.86%, which is lower than Q4 2025. We expect it to reduce further in coming quarter. Looking ahead, we have a clear visibility of future cash flow from our ongoing and forthcoming inventories. From all our completed and ongoing projects, we expect total of 24,752 crore of future cash inflow. The cost to complete this project is estimated at 13,661 crores, thereby generating marginal cash flow potential of 1,191 crore at project level. We expect to realize this over next 4 to 5 years. Additionally, we shall generate another 7,000 crore of marginal cash flow in next 5 to 6 years from forthcoming project of 18.38 million square feet, which will be launched in next 6 to 8 quarters. Overall, we are on a very strong financial footing with robust future cash flow visibility, giving us the confidence to pursue growth opportunities. Now coming to P&L, for the quarter we recorded total income of 901 crore. Real estate income contributed 690 crore. Contracts manufacturing contributed 162 crore. Our EBITDA was 73 crore with margin of 8.1%. We generated PAT of 13.6 crore with a margin of 1.5%. As we start recognize revenue from new project in upcoming quarters, we expect improvement in margins. Our total balance revenue to be recognized from already sold unit as on 30th June 2025 was 17,245 crore. With this, we can now open the floor for questions. Once again, thank you all for your participation.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Puneet from HSBC. Please proceed.
Thank you so much and congratulations on good start for the quarter. My first question is on margins, right? I mean, if your margins, if you had included those 5 projects which did not receive OC, what would your margins have been?
Good evening, Puneet. We have these 5 projects which we should have received these OCs. Unfortunately, there have been delays at the authority end due to certain ongoing matters related to the fee that needs to be charged to the projects for the issuance of any approvals. If we had included those, we could recognize additional close over 650 crores with regard to these projects, and probably the net that we could have recognized, net in the sense PBT would be over 150 crores.
Okay, so then PBT adjusting for all this, a clean PBT would have been 400 crore.
Yes.
Okay, that's interesting. Secondly, are the secondly, are the loss-making contractual business part of the problems resolved now?
Absolutely. All the contractual projects which we had undertaken in the previously, all of the projects are completed. See, in contracts we do projects related to civil, electrical and plumbing. We are continuing to execute and take up new projects in electrical and plumbing. However, in civil we have only one project which is ongoing in Bangalore. Other than that, all the rest of the projects are completed and corresponding revenue and costs, most of it is already taken. So any concerns related to margins in those in that division are so far it's all accounted for, and hence we should not see anything more going forward.
Okay, that's good to hear. And also on your central overheads and advertising expenses, both have been higher this quarter. Any particular reason for that?
Typically the Q1 is generally higher, and this time particularly because we had to incur expenses related to IT, which is technology expenses, which is license expenses which come in once periodically, not necessarily every year, but it comes periodically. So that's one. And second is some insurance related expenses also have been higher. So both these have contributed to higher expenses. And in addition to that, some of the expenses which we were earlier categorizing in projects expenses, which we started treating as overhead expenses, and hence they have also contributed to slight increase in the overhead expenses. So going forward, I think it would not be as high as what you are seeing in this first quarter, but it will be slightly lower. And second is related to the sales and marketing expenses. Of course, with higher sale value, there would be higher expenses going forward, and that will, in fact, that will cause a little bit of pressure on the P&L in this financial year.
Understood. That's helpful. And lastly, if you can talk about what are the major projects we should look out for in the coming year?
In terms of launches?
In terms of launches, yes.
Well, in terms of launches, like I was saying, there are three small size projects in Bangalore. There are a couple of projects in Gurgaon which can be large, and one in Greater Noida. There is one project in Pune which we intend to launch during this year, and Chennai we have a reasonably large size project. In addition, in Kerala we have a couple of projects, one in Trivandrum and one in Calicut. These largely should, if cumulatively, if we do all of these, it should be close to about 7 to 8 million square feet. We have already done about 1.62 million square feet.
Understood. And if I can just squeeze in the last one here, on the projects which you launched in Noida, how much of it has been sold and what is still to sell? Sobha Aurum?
As on end of the quarter, we sold close to 80%, and the remaining hopefully we should be completing it this quarter.
And what was the sale value and volume for this, if you can give for this project?
Yeah. The value for Aurum, which was part of the operational update, 2,078 crores, it's 833 crores.
833 crores. Okay, that's very helpful. Thank you so much and all the best.
Thank you, Puneet.
Thank you. Before we proceed with the next question, ladies and gentlemen, in order to ensure that the management is able to address questions from all participants in the conference, please limit your questions to 2 per participant. The next question is from the line of Parikshit Kandpal from HDFC Securities. Please proceed.
Yeah, hi Jagdish. Congratulations on crossing the 2,000 crore mark on pre-sales. So just wanted to understand, is it now the quarterly bottom now for us, and things will continue to build around this number and increase from here on in subsequent quarters?
Thank you, Parikshit. A lot of our performance in future is also dependent on our new launches, and even the sustained sales that we are seeing from existing projects seems to be good and stable as of now. So hence, we do aim to beat this number and be consistent. However, as you are aware, the external market conditions and the timing of the launches are also very critical. So we are hoping that we will achieve these timelines, and once we do that, hope that we should be able to do far better than what we did last year and what we have guided for this year.
Wow, great. Good to hear that. The other question is on, I just want clarification. You said you have missed around 5 projects, OC of 650 crores revenue and 450 crores PBT. So is this number correct? Because PBT number...
Sorry, Parikshit, it's not 450, it is 150 crores.
Okay, my bad. So 150. Okay. 150 crores was the PBT from this. Okay, just lastly on the business development. So anything in this quarter, and especially also on the launches, what are the launches planned for this quarter? So that will be my last question.
So this quarter we did plan to launch 2 projects in Bangalore and 1 project in Gurgaon. However, I think there might be touch and go. So I'm hoping that at least 1 project we will be able to launch.
And value of that project, and also business development done in this quarter?
Well, you are aware that we do not disclose business development actively, and as and when they come into the pipeline, you will be able to see those. Or as of the value of the new launch, we are hoping at least 1 project which is of about 950 crores.
Is Banergeta one?
Yes.
Okay, sure. Thank you, Jagdish.
Thank you, Parikshit.
Thank you. The next question is from the line of Pritesh Sheth from Axis Capital. Please proceed.
Hi, good evening to the team. Congrats on great numbers. Firstly, just on this response to this, Greater Noida project that we got, how you read this? Was the market Greater Noida too hot? Too much of demand right now? Or, from our side, we strategically did something to get, such a kind of response? And, how do you expect the response for other launches during the year, across the markets that you see? How the other markets behaving versus what you have seen in Greater Noida? That's my first question.
Yes, Pritesh, the first project response has been really good. We are very happy to see that. Over the years, there is definitely a good pickup in the demand side in Noida and Greater Noida, and considering that we could capitalize on it is a good thing. But as in any market, it's a function of demand and supply. And right now, it does seem that the supply is a little bit limited in Noida and Greater Noida. And as it opens up, things might be a little different. But we are happy to be in the current position, and we are hoping to launch our next project also in next few quarters, and hope to see good response there as well.
And your thoughts on other markets like Gurgaon, Bangalore, Kerala, where you had a launch? How are those markets behaving in terms of demand versus your in general expectations, about the current demand situation? Has there been better, in line with your expectation, or slightly lower? If you can highlight or give a color on each of these markets.
The demand environment in all these markets, Pradesh, which is Kerala, Bangalore and Gurgaon, seem to be very stable for us. If I look at all our leading parameters, which is with respect to the opportunities that we get, the site visits that people are doing, it seems to be good interest in terms of real estate buying, and there's good interest in terms of end user buying. So I believe that the situation of good demand continues to stay. Now, as things progress, now it depends on how much is the supply that's going to come into the market. So that also would play a big role in terms of at least medium to long term how things will pan out. But overall, from a demand perspective, the basic fundamentals continue to remain the same, and it looks like there is stability over there.
Sure, got it. And just in Greater Noida, we have two projects now, and one already largely done with. We have another one upcoming. What are the avenues to expand our pipeline in Noida, Greater Noida? Is it that we'll have to continue to wait with government auctions? How is the intensity there, or are there some kind of private opportunities which are also available, like the one we have already done? To increase our pipeline there and continue to be present in that market?
No, that's a good question, Pritesh. We are exploring all opportunities, particularly Noida, Greater Noida. Majority of the lands are with the government, and or someone has taken the land to the government. So it's an avenue, of course. Which do have private lands as well. So we are surely looking at other opportunities also. Like I said, the pricing and the demand environment has definitely improved, and it provides us a good chance to look at these opportunities now.
So thanks for that. That is from my side for now. In case I have any questions, I will jump back to the queue. Thank you. All the best.
Thank you.
Thank you. The next question is from the line of Biplav Debbarma from Antique Stock Broking. Please proceed.
Good afternoon, sir, and good afternoon, everyone. Congratulations on the excellent performance. My first question is on the stated launch pipeline for the remaining of the year. You mentioned around 7-8 million square feet. So just wanted to understand, are we planning to launch the entire 7-8 million square feet, or we say launch 7-8 million square feet, but open just part of each project? And also in that, I didn't hear Mumbai project. So is Mumbai project part of the pipeline? This is my first question.
Oh, yeah. To clarify on the Mumbai project, yes, it is part of the pipeline project. To the earlier question, I was answering for the major large projects that we can launch. So Mumbai is our first phase, is a smaller one. It's about should be about 150,000 square feet to start with. So hence I didn't add in the pipeline, but it surely is part of that. Coming to the other 8 to 9 million square feet, so the definition of our launch of a project is once we obtain RERA, that we open the sale to the market, irrespective of the size of the project. We say that when we say launch, the entire inventory that is available where we have obtained RERA is declared as launches. But like we do open the sale on a phase-wise manner, and if demand is good, then we open up all phases. But given the nature of the launches this year, majority of them are not very large sizes, and hence we should be able to open up the entire inventory for most of it. So if I have to say that about if it's about 8 million square feet, I think 70 to 80% of it should be available for sale.
Okay, thanks for the clarity. And is on
Mr. Biplav.
Sir? Yeah.
Actually, your voice is not clear.
Am I audible now?
No, sir, your
You are
voice is
Bipla, but
breaking.
your voice is breaking. Can you please repeat that? Repeat your question, please.
Second is on the brokerage and accounting policy and brokerage. So basically trying to understand what the
Sorry to interrupt, Mr. Bipla.
how much is the
Hello?
is it
Hello, Mr. Bipla.
yeah.
Could you please rejoin
Yes.
to the queue?
Okay.
Yes. Thank you. The next question is from the line of Manoj Dua from Geometric. Please proceed.
Good afternoon, sir. What is the guidance for pre-sale this year?
Good afternoon, Duaji. We had guided for 30% increase over last financial year, Duaji.
Okay.
And
Secondly,
that we
please continue.
towards and with an expectation that we would go towards a 10,000 crore sale in the subsequent year.
Okay. Secondly, where I see there are, since you've joined as MD, there are some changes we observe, like in Greater Noida, the amount of project you sell to the total size was much higher, and the projects are being launched very fast when they are being in the business development. Can you give context to what are the major changes that has happened in 3-4 years in Sobha in terms of your strategy and keeping with the pace of the time?
Well, Duaji, it's not just about just last 3 to 4 years. We have been at it in terms of the overall operations for past 3 decades. Incidentally, we are completing 30 years this year. We did focus on few things, which is like you mentioned, the new project launches and making sure that the timeline of the launches from the time we obtain the land is very critical, and that's some area where we need to work in an integrated manner internally. So that's something we have clearly focused upon, and there is a separate team which is formed to coordinate this, and that has helped us in accelerating some of our project launches. That's one. And second, even in terms of business development, we have been lucky in few locations, like in Greater Noida, where we had, in fact, we have paid the total value for the land in November last year, and we could launch the project in June. So that's been a very good turnaround for us, and so that's very heartening to see. While this is happening in some other cities, it's not such a rosy picture, and we still are, mainly due to the external factors, we are continuing to improve in those cities as well.
Okay. Hoskote will be launched this year?
Hoskote, it's a fairly large project, and we are for phase 1 we are mostly done with our land consolidation and the initial planning and the drawings. So we should start working towards approvals since we started working on approvals from this month. Depending on the entire timeline of the whole approvals, we should be able to launch it within the next 1 year. Is what our expectation is. If it can happen earlier, nothing like that.
As you told that if the 650 crore revenue would have recognized this year, we could have got 150 crore PAT. So can we take going forward whatever project we have launched in last 2-3 years and we're launching now, 20% PBT is given almost in most of the project on the project level? 20% PBT?
Yes, Duaji. This 150 crores, what I mentioned was PBT, not PAT. The second is for all the new projects that we have been selling in the past, say 2 years, we have guided last time that we have at the project level, the EBITDA margins is at 33%.
Okay. And congratulations on adding Greater Noida and Mumbai to the micro market list. Thank you and best of luck.
Thank you, Shivaji.
Thank you. The next question is from the line of Parvez Qazi from Nuvama Group. Please proceed.
Hi. Good evening, and thanks for taking my question, and congrats for a great set of numbers. So couple of questions from my side. First, when we talk about this potential launches of 8 to 9 million square feet, does this include the launches that we have already done in Q1, or does it exclude it?
Good evening, Parvez. So we are hoping that we'll do this another 8 million square feet in the next 9 months.
Sure. And what will be the total, let's say, sales potential of the 8 million square feet over the 3 quarters?
Well, the total value of the projects at an average of at least 12,000 should be about close to 10,000 crores. How much of that is going to translate into sales is dependent on the timing of the launch of the project. But overall, we expect that we should be doing roughly about 50% of our sales from new launches in this year and 50% from the earlier inventory that we had.
Which is pretty much similar to what we did in Q1, right? About 1,000 odd crore from new launches and 1,000 crore from sustainable.
Absolutely. You're right.
And lastly, in terms of the ticket size of the projects that we are launching, I mean, if one looked at Q1 sales, roughly about 60 odd % was from ticket sizes less than 3 crore and about 40% above 3 crore. So for the upcoming 8 million square feet of launches, will the split be largely same or will it be slightly different? Thank you.
Yeah. So last year around this time we had a much larger sale value through a much higher ticket size because of the launches of high ticket size projects that have come together. And I have been saying this that it was no strategic call that we have taken, just that the timing of all of those projects have come together. But otherwise, all our projects, our bread and butter business has been largely between 1,800 to 2,000 square feet, and which is roughly about a ticket size between 2 to 3 crores. However, as some of the projects and also some of the inventory in each of these projects would be over that ticket sizes as well. So it's going to be a mix of both, but tilted towards less than 3 crores.
Sure. Thanks and all the best.
Thank you, Parvez.
Thank you. The next question is from the line of Himanshu Upadhyay from Bugle Rock Asia. Please proceed.
Yeah, hi. Good afternoon. My first question was, can you give your thoughts on business development and any thoughts on which markets are most attractive markets in terms of difference between sales value and cost of land currently in the market, and where you find the least favorable markets in terms of profitability over next 4 to 5 years? Some of your thoughts will be helpful.
Thank you, Himanshu. That's a strategic question which probably I'll not be elaborating much, but what we can see is for us, the priority markets are where we in our current operations is Bangalore. Of course, second is NCR. In addition to these two, we would be in long term we would look at Mumbai as well. However, we have just started there. So these three are, as you know, are very large markets in India. In addition to this, of course, our presence in Kerala and Hyderabad, Chennai and Pune are also there. So these would continue to be our areas where if we find very opportunistic lands, then we would look at investment from a high return on investment. If you that's what if you are alluding to, then still Bangalore is a good market. NCR also is a good market. Mumbai we are still testing out, so our understanding is limited, and hence as we continue to look at opportunities and invest there, we'll have a much better view. So from our priority markets right now, both these seem to be good, both in terms of returns and in terms of the demand potential and our own presence. So they make the most strategic sense for us in focusing here. And while we leverage our presence in other locations and see if we get something which is great on return, great on margins, we'll definitely take those up.
And one question on Mumbai, okay. We have launched a very small project or land acquisition, okay. And what is our thought process? So are we exploring various micro markets through small projects, and then we finalize a micro market and then we launch or serve a bigger project, or it was just it happened that we have started with a small project? Is it strategically that we are just doing a small project? Some thoughts on that will be helpful, or how are you approaching that market?
Yeah, we have been evaluating various types and sizes of the projects, and we had been doing it for the past more than a year. It depends on the cycle at where we had our capital availability also. So at that point of time, where we had done this and some of the others that we are evaluating and in advanced stages, there are two factors that we would consider. One is the size of the opportunity and the quality of the opportunity, and second is our own ability to fund it. So both these matter. Now that we have slightly better capital structure in which we can evaluate opportunities, we should be looking at larger ones. But more importantly for us, the first one is very critical because our own understanding of the market and going through the entire process of acquisition to launch and completion is very critical, so that we would have significant learnings from it and take it forward from there. So we are in the market for a very long term, and hence and Mumbai is a very large market, and hence we are on a path on exploratory nature right now, and as and when we find good opportunities, we would be willing to take those up.
Just a follow up on this. See, when we do this 1,50,000 saleable type of project, nearly the 150 type of flats, okay. Can we give and show our all prospects or what we can do in such a small piece of land? And do you think you will be able to create a brand what we have in NCR or Bangalore to these smaller projects? What are your thoughts?
It's a good question, Himanshu. First thing is, in this particular project, this is phase 1 of the project. It's actually the total size of the project is over 300,000 square feet. So the second part is regarding the scale of the project. Yes, you would definitely we would like to do projects which are larger in nature. However, I think considering the nature of land and kind of opportunities that are present in Mumbai, and particularly in the core Mumbai areas, so it is very difficult to start with a much larger development potential. So hence, even if this is we think that this is a good start for us. We will be able to showcase our quality even in a project like this. But that entire construction and experience for the customers would take time. However, since the brand is well recognized, we do think that the understanding of our brand and our processes, there are people who who do understand that and should be able to be moving towards us and building a brand. So this is it might be a small step, but at the same time we are continuously evaluating new opportunities.
Thanks. I'll join back for further queries.
Thank you very much.
Thank you. The next question is from the line of Johan Bhattiwala from Motilal Oswal. Please proceed.
Yeah. Hi. Thank you very much. Am I audible?
Yes, Johan.
Yeah. Thank you. First of all, good evening, sir. My question is on your earlier comment on the project level EBITDA margin. You said you target 33%. Just a bookkeeping question on that. On PBT basis, what is the margin that you target for the 172 billion? And also, on an overall perspective, what will be the margin excluding overheads and interest?
Well, Johan, that's a slightly tricky question because the timing of the recognition of that revenue plays a significant role in terms of arriving from that project level EBITDA to a PAT level for the company, because there are various overheads that come in which are recognized during the quarters, and whereas the timing of these unrecognized revenues, when they come in and how much quantum of that coming in matters a lot, and hence it's very difficult to just clearly say that how much would that translate into PAT. But what we can clearly say is that as we go forward, the core EBITDA margins that we are seeing at the project level, which were in the past, has definitely are seeing an increase, and hence overall our PAT margins also should significantly see an increase.
Sure. Okay. And my second question is on the OCF. I think in the last quarter's call, you guided a 10% increase for FY26. Does that still hold true?
In terms of operating cash flow?
Yes. For the full year?
For the full year, yes. I mean, we would still be on track for that. Overall, with the increase in our sales value and corresponding milestone achievements in the construction, we should be able to do better. Yes.
Sure. Thank you very much. Have a nice day. Thanks.
Thank you, Johan.
Thank you. The next question is from the line of Puneet from HSBC. Please proceed.
Yeah, thank you so much. My question is again on the on your net debt. Now you have a significant amount of cash, and you're also buying land, as I can see in the cash flow statement. What are your thoughts on deployment of this cash? How soon do you think can you spend bulk of it, and where is it really going? What areas are you targeting?
Puneet, we from a debt point of view, yes, we have significant cash sitting on our books. Majority of them are in RERA accounts, which would get available for deployment as and when we progress on the projects.
How much would be RERA cash? Sorry.
1,300 crores. About 1,300 crores of that would be RERA cash.
Okay.
So, but that gives a big confidence for us to actually deploy capital. While that is the case, but today there are three aspects to this. One, we are far better off in terms of financial structure. Yes. Second, the demand environment is good. But on the other side, the cost of land and the kind of opportunities that we are seeing are fully mature, in the sense the margin of error is margin of safety is much lower than what we could see a couple of years ago. So it's very, in a calibrated manner, we will need to deploy this cash. And while that is the case, we are in a situation where we have good visibility of inventory from our own projects, which we have done either consolidated land in the past or we have done business development in the past. So hence, we would deploy this capital in a calibrated manner and wherever we find good opportunities, and we are not in a super hurry to deploy it, because not necessarily just because we have cash we need to deploy it.
Understand. And what's the need to buy land here? You had significant amount of land here, right? And you're still spending close to 280 crores this quarter as well. So where is it really?
Some of the cash outflow that we are seeing is not necessarily in the new land that we are acquiring, but a part of it is majority of that part is being deployed for the earlier land procurements and to consolidate those lands or whatever deals that we have done in the past. So this quarter, majority of that cash flow has gone towards that. Last year, tentatively we have deployed cash where we have increased our overall value, the sale value we have, or let's say on a saleable area point of view, we have done over 9 to 9.5 million square feet. So this year also, let's see how we will deploy it based on the opportunities available. However, some of the past development that we have done, those have flown into this, will flow into this year, and some of it we have seen in this quarter also.
So in simple terms, is it fair to assume that the 281 crores is essentially going to the 1,765 acres that you had categorized earlier as under various stages of consolidation? That's where it is getting cleaned up.
That's right, and some of them would be in some of the forthcoming projects where there would be some dues either to the landowner or in terms of certain other payments related to the land.
Understood. That's very helpful. And lastly, just again on the taxation side, the income tax has been quite low for you in last couple of quarters. What has really changed there?
Yeah.
Like this quarter was 387 crore, used to be 67 crore earlier. Sorry, 38% 67.
Okay. I would like Yogesh to take that question.
Puneet, income tax is in current, we are maintaining income tax book separately, where our profit is very high and we are paying income tax accordingly. That is recorded as a deferred tax for us. Okay. And
so I'm just talking about the cash tax which you put out in the cash flow statement, the 38.7 crore versus 67.
Cash flow, because that cash flow thing, if you are cash flow has, see, income tax has two parts. One is TDS deducted by customer, okay, which is already remitted by customer. Here we are talking about cash flow from our Sobha side. So that is on an average we are expecting that 200 crore will pay income tax including TDS this year.
This year 200 crore. So out of 38.7, which is already paid.
Including TDS, which is not captured in cash flow.
Which is also there, right? You include in the presentation income tax including TDS.
This has two parts, Puneet. One is income tax, second is TDS deducted for our vendors.
Okay, so 38.7 is the vendor part of it.
Vendor plus income tax advance tax we paid. Both considered.
Yeah, so and this number should correlate to 200 for full year.
This number, yeah, you can correlate 200.
Okay, that's very helpful. Thank you so much. All the best.
Thank you. The next question is from the line of Biplab Dabarma from Antique Stock Broking. Please proceed.
Thank you. Am I audible?
Yes, Biplab. Now it's much better.
Yeah. My question was, what is the brokerage structure? Like, how much is paid and when is it disbursed? Is it disbursed at the time of booking or 10% receipt or staggered? And what is the accounting treatment? Do you fully expense in that year or whenever we pay the money? Like, I'm just trying to understand the brokerage and accounting policy of brokerage.
Good question, Viplav. See, the payment of brokerage is typically after at least 20% of the payment by the customer and signing of the agreement with the customer. That's one. Second is the accounting treatment of brokerage is if it's an own land project, then it is the entire brokerage paid, which we can account to specific unit in the project. Those are accounted as the project cost and recognized as a cost whenever the revenue recognition happens for that project, which is typically at the time of completion and handover. Whereas for the joint development projects, whatever is the share of the brokerage for the landowner, that is expensed as part of the quarterly expenses.
Okay. Thank you, and all the best, sir.
Thank you. The next question is from the line of Parikshit Kandpal from HDFC Securities. Please proceed.
Thanks for the follow-up. So Jagdish, my question was on EBITDA margin. So if you had recognized these 5 projects, so your EBITDA broadly works to be around 12.5% or 13% in that range, which is almost a 8 quarters high. So directionally now we will keep bettering this every quarter, and eventually maybe when do we reach that 33% mark? So how many quarters do you think this journey will take us from here, 12 to 13%, going up to 30% plus?
Right. Parikshit, yes, you are right. The EBITDA margin should have been far higher this quarter, pending these OCs. Directionally, we are in a upward function. Third is 33% is an EBITDA margin at the project level, and the EBITDA margin that we see in our P&L is post all the expenses which are overheads and other items as well. So EBITDA margin of 30 post all of that, like I was mentioning earlier, it will again depend upon the timing of these recognition of the revenue.
But directionally now in this coming quarter also, I mean, and other quarters, like we are bettering that 12 to 13% now, so we're moving ahead of that now.
Yes, it should become better. The only treatment in P&L, one of the things that we need to be cognizant of is on a higher sale. If I'm spending higher sales and marketing costs, that would, of course, be additional coming in as expense versus the revenue that we are recognizing. We are today selling at an average of 12,000 to 13,000 rupees, right? And versus we are recognizing revenue at about 7,000 rupees, and we are recognizing margin. So corresponding sales and marketing at an increasing function, right? If you look at it, then it will impact the P&L for the current year. In a typical, I'm sure you have seen all the P&Ls of real estate companies, particularly the ones who recognize revenue on completion basis. An increase in sale in the pre-sales for the subsequent years are in fact detrimental to the P&L. But that's how the accounting works, and that does not mean that it is we are in a worse situation than earlier. But coming back to your earlier point, which is we should be seeing a increasing project level margins, and that should reflect in an overall margin improvement of the company.
Okay. I think a couple of quarters back you said that quarterly run rate on revenue will now be about 1,000 crores, and this quarter with that OCs, if they had come, we would have touched 1,500. So year as a whole now, quarterly averages, like how the revenues will move, because you did say that 4 million square feet to 4.5 million is delivery, so which would translate to about 4,000 to 5,000 crores of revenue. So how do we look at the quarterly revenues now or the yearly revenues?
Yes, this particular quarter would have been lumpy. because this unrecognized revenue of about 650 crores was pending from a little earlier also, and which we surely thought that it would have come in this quarter. While we got it covered from, actual real estate revenue, it is about close to 600 crores. And that's, if we had added this, then it would have been 1260, but this would have been slightly higher than typical quarter, because the OCs were pending for a longer duration.
But quarterly run rate now, so is it like 1,000 going much higher now from here on?
Sorry, Parikshit, largely like we have in the initial comments, our CFO also has mentioned that we have a unrecognized revenue of 17,000 crores, which was about 16,000 crores in a couple of quarters earlier. So if we have to recognize in the next 4 years these revenues, it would be roughly about 1,000 to 1,100 crores.
Okay. Just lastly on the Gurgaon. So now.
Mr. Parikshit.
Yeah, sure.
So could you please go back to the queue, as there are several participants waiting for their turn.
Sure. Thank you.
Thank you. The next question is from the line of Pritesh Sheth from Axis Capital. Please proceed.
Yeah, just one question as a follow-up. So 10,000 crore of pending launches for this year. Q2 would be 1,000 crore because of some slipovers. Next 2 quarters, should we assume it would be like equally split, 4,500 crore across both the quarters? And particularly, when are we expecting next launches in Gurgaon, Sector 63, and Noida, the other project that we have?
Yes, Pritesh. So we should be seeing these launches in the next 2 quarters after Q3 and Q4, but largely they are skewed towards end of Q3 or beginning of Q4.
Okay, and Gurgaon and Noida, the project?
Gurgaon and Noida also similar, end of Q3, beginning of Q4.
Sure. Okay. Thanks. That's it for me.
Thank you, Pritesh.
Thank you. Ladies and gentlemen, due to time constraints, that was the last question for the day. I would now like to hand the conference over to the management for closing comments. Over to you, sir.
Thank you. Thank you everyone for participating on a call even on a Saturday. We really appreciate that. We hope that we have answered most of your questions. In case if we could not, we can connect with you through our investor relations subsequently. Like I mentioned in the earlier in the opening comments, we are at a good juncture in terms of a stable demand environment, and we have built a good brand around ourselves, and we have exceptional experience in terms of developing projects across India. And this we think that with the current financial structure and with the kind of brand and experience that we have built, it's a opportune time for us to have a very long-term growth, and we continue to invest in opportunities, people, processes, and technology to enable this long-term growth. Thank you everyone for participating, and have a good weekend.
On behalf of ICICI Securities Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.
If you found this video helpful, please like, share, and subscribe for latest upcoming videos.